Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, we normally do provide updates on this every few weeks or so, and of course, the reason is because we know historically that in bull markets, holding support on the 20-week SMA is often quite useful in seeing sustained rallies. And in bear markets, we tend to just sort of get rejected by the bull market support band. And so we will continue to provide updates to it. Again, to help temper our expectations, we can always look to history and see that it generally does take a few tests before you really see a sustained move higher. But one of the things I wanted to hone in on here is just where are the values currently? And of course, we're going to take a look at the market in a little bit more detail than just that. Right now, the 20-week SMA is coming in around 19.8K. The 21-week EMA is at 21.3K. So it essentially ranges from just below 20K, so 19.8, all the way up to 21.3, about a $1,400-$1,500 range. So it is a pretty wide range, all things considered, especially considering how tight the range has been at various phases throughout the bear market. So if Bitcoin were to see sort of a plunge here, this would be sort of the first line of defense, I suppose, for the bulls to try to at least hold on to some level of support. Now, we've talked some about the golden crosses and death crosses, so I do want to provide a little bit of an update in this video as well. If we switch this over to the daily time frame and we turn on, say, the 50-day and the 200-day SMA, you can see that we, in fact, had that golden cross back in early February. And if you remember, what did we suggest back then? We say it every single time, and we'll say it next time too, is that normally when you get a golden cross, you see a short-term sell-off followed by a continuation of the trend, right? Like we've seen this happen so many times, and it's never really a popular theory because, or, sort of suggestion because everyone wants to feel sure about what direction the market's going to go. And generally, when you talk about a golden cross, it sort of elicits the emotion of, oh, well, that means things going to go higher. And normally they do, but you typically will often see a sell-off right after the golden cross, right? Or going into it. And you can see the market peaked here. We had the golden cross and then we ultimately sold off. And even if you go to the date that we had the golden cross, you can still see the market fell about another 7% or so after we had the golden cross. So again, you see the cross. We normally see a dump after a golden cross in the short term, followed by a continuation of the trend. Now the trend is up, right? The golden cross, you see that short-term dump. Everyone sort of celebrates the golden cross, right? We're going higher. We normally get a dump. And then you see the continuation of the trend. So this did happen once again. And again, it's not rocket science, right? I mean, this is just something we've seen happen many, many times, right? You get a golden cross, you normally see a dump, and then you see a continuation of the trend. And you can go back in history and see this play out time and time again, right? Even in 2019, you had a golden cross, but you had a dump right at the golden cross followed by a continuation of the trend. So it's fairly standard stuff. But in the same way, death crosses, when you see the 50-day go below the 200-day SMA, what happens in those situations, right? Well, normally you see a pump followed by a continuation of the trend to the downside. Now, you can see that the 50-day SMA is starting to roll here a little bit. Okay, so this trend has certainly lost some of its strength over the last couple of weeks. As you can see, that price action has somewhat stalled, and we really haven't yet seen a continuation beyond what initially came, right? The initial continuation of the trend. And I think there's a couple things to look at in that instance. First, I'm going to look closer here on the daily time frame, but we're also going to switch this back to the weekly time frame as well. One thing to look at on the daily time frame is we've sort of been kind of holding these lows here. Okay, so you can see that Bitcoin has more or less just been bouncing off of these lows. First, it was at 20.4K, and then it was at 21.3K, and then now it's at around 22K or so, or it was at 22K a few days ago. Now the sort of this bottom part of this range here is around 22.2. So if we get daily closes below 22.2, then that should send off some warning signs for for Bitcoin's price. Interestingly enough, we actually have um, some fairly interesting events coming up here over the next couple of days. We're going to hear Powell speaking, and I would imagine that markets are going to be hanging on to his every word, like they typically do. And if he gives if he gives markets any reason to rally, then I'm guessing they would take that opportunity. They would jump on that opportunity and at least try to take their swing at a potential move higher, at least in the short term. Not necessarily a higher high, but at least as a starting point, a move back up into some part higher in this range, and of course the range low, or at least the higher lows that we've been putting in so far. Although, on the other hand, if Powell comes out and sort of gives a speech similar to what he's given before, like at Jackson Hole, where he just comes out very hawkish, not really interested in talking about things from a more dovish point of view, then that could put more downward pressure on risk assets. I mean, at the end of the day, the short-term moves are really difficult to predict, and I'm not going to come up here and say that I know exactly which way these things are going to break, because I certainly do not know. What I do know, though, is that markets will often look for reasons to rally until they're given enough reasons not to. Okay, and we've seen this happen many, many times, right? Where you'll get, and it goes in both directions, right? So like in bull markets, people ignore bad news, and bear markets, people ignore good news, and those markets will go on sort of ignoring the other type of news that sort of goes counter to the general trend until they have enough reasons not to, right? So in a bear market, they'll ignore the good news until there's enough reasons not to, right? If the good news just is overwhelming and there's enough reasons to turn things back around, same thing occurs in bull markets. So again, markets can rally until they're given enough reasons not to. And I think the main thing to look for here is, how's Powell going to come out with his speech? Is he going to come out very hawkish and talk about, just sort of, these higher for longer mantra that he's been talking about for a long time? Or does he, talk about potentially pausing at some point later this summer? I do think, a lot of the market participants will be interested in exactly what he has to say. So we're sitting, sort of at the bottom of this channel that we've been in essentially for most of this year. Okay, so again, a move back up to say sort of the mid part of the range would put us back above 24K. To the upper part, it would all the way be up at like 27K or so. But where I think we also need to consider something is, we talked about the golden cross on the daily time frame, right? But there's also the death cross on the weekly time frame. And if you remember, the thesis here is that when you get a golden cross or a death cross, you see the short-term reaction is the opposite of what the cross would imply, but then eventually the idea is you get a continuation of the trend. So again, on the daily time frame, what did that mean? It meant a dump right after the golden cross, right? A dump right after the golden cross, followed by a continuation of the trend to the upside, because the trend was going up. So on a death cross, on the weekly time frame, you would sort of say, okay, well, what would happen going into a death cross or right after a death cross? So we had the death cross on the week of February 6th, and then you can see the following week what happened. We had a nice move to the upside, right? I mean, Bitcoin pumped about 16-17%. So yet again, you see an instance where the death cross came in, but rather a short-term move to the downside, like a lot of people might expect with a death cross, because as the name implies, it's not the most, not the most joyfully named indicators. You actually see sort of the reverse of what a lot of people would think would happen after you get a death cross, and you actually see a pump right after the death cross. Now the question is what's going to happen now? Because if it follows the general thesis, is that it goes counter to what you might expect in the short term, but eventually you would see a continuation of the trend. Now in this case, the trend to get you to a death cross is down, right? That's the trend that would get you to a death cross. So in the short term, you saw a move counter to the trend after the death cross. And now, of course, the question is, are we going to see a continuation of the trend where it eventually rolls back over to the downside and you get that continuation of the trend that is ultimately what led to the death cross in the first place. Now, unfortunately, with weekly crosses, we don't really have any previous data to really talk about. We can't go over here and look to see what previously happened on prior death crosses on the weekly time frame for Bitcoin and try to assess what that means, because it just simply has never happened before. It's never happened before. Okay, so it's not the same thing necessarily as what you might look at on the daily time frame, but we can always go and look at, say, the S&P 500 and look to see what has it done on previous death crosses to get an idea of what are some things that you might expect on this death cross here. You can see that the S&P had already fallen quite a bit. It did eventually go just a bit lower. Now in the short term, it might have gone. I mean, if you look here, the cross occurred in October of 2008, and in March the market bottomed, but by October of the following year, the market was already higher. So your 12-month forward return at the death cross was still good, right? Like imagine you had just bought the index at this death cross. Yeah, it might have sucked in the short term, but a year later, you'd have been doing fine, right? I mean, you wouldn't have gotten the bottom, but in the grand scheme of things, imagine you told someone that you bought this death cross over here back in October of 2008, and you bought it at when the S&P was around 900 or so. Do you think they're making fun of you for not identically timing this bottom? No, you still made a lot of money, right? Like, that's the point. You still did really well. What about over here when we had a death cross, right? So in the short term, after the death cross, we had a short-term move back up to the upside. It wasn't the low, though, right? Eventually, the market rolled over, and we put in a new low. So this occurred in September 2001, and had you bought the death cross, the price at the death cross, September 2001, by September 2003, so 2 years later, you would have been, back well in the money and trending higher for a while. So I mean, it really does depend on what your time horizon what your time horizon is, as to whether these things are meaningful to you or not. Perhaps it's worthwhile to take a look at what happened in the 70s. We had several death crosses, in fact. So we had a death cross here in May of 1970. You can see when that occurred. It did not mark the bottom, but had you bought when the death cross occurred, you would have gotten it around 80, and that would have been in about April of 1970. By August of 1970, so not even half a year later or so, you would have been back at that price and trending higher, although it did not mark the bottom. In April of 74, we had a death cross, and had you bought at the death cross, that would have put you buying at around $90 or not $90, just 90, the index at 90. And in May of 74, and then in May of 75, you would have been essentially at the same level. One more pullback, and then we were back sort of off to the races over here and trending higher once again. So generally speaking, when you get death crosses in the market, in the short term, you can often see pumps in the short term. Historically, at least with the S&P, there has, at least in the last few cases, right, there has been a bit more downside, but over the next 1 to 2 years, it was still seen as a relatively attractive price, right? This is sort of the point that I'm trying to make, is that, in these cases, it did not necessarily mark the bottom when the death cross occurred, but from that level, it wasn't like that much further down. And your forward 1 to 2 year returns were fairly decent, even if the market did trend lower before you actually got to that point and realized a profit on the trade. So that's sort of the point. So when you look over here at Bitcoin, when the cross occurred, Bitcoin was trading right around the price that it's trading at right now, which is around 22.5K. Now, as I've said, I think this year is going to sort of chop up both sides of market participants, both bulls and the bears. It's my general expectation for the year. I think some people want it to be a lot more complicated than that and say it's going to either be down only or up only. But the truth is that, if you look at 2015 and 2019, the years that follow these sort of down only bear market years, were relatively choppy and got both sides wrecked quite handedly. And I don't really expect this year to be any different. I think that you're going to see a very choppy market where we're going to wreck both sides, both bulls and bears. Of course, we've started the year by wrecking the bears. I mean, this is what's happened. So I think we're going to see a continuation of that for the remainder of the year. You can already tell people are getting relatively apathetic, right? I mean, I don't think there's any there's not really any evidence that people are very enthusiastic about these market conditions. So I do think apathy is somewhat setting in. And generally, when this occurs, you just get a really boring and choppy market, and this can last for a while. So that is my general expectation, is that you're going to see more or less that play out. Where, in the short term, there could always be short-term moves in either direction. But as the year goes on, I imagine we're going to generally be spending it in this sort of range where, it could go just a bit higher, could go just a bit lower, but I don't really see I don't really see Bitcoin breaking out to like 40K or something. I know the echo bubble is sort of a popular narrative, but I also don't see Bitcoin crashing to $3,000 either, like is a somewhat popular narrative as well. It's likely not going to go to either of those extremes. It's likely just going to be a choppy market with deviations in both directions, to the upside and the downside, that is sufficient, or it's enough to get people sufficiently wrecked. And then by the time we go back to quantitative easing, and a sort of like a real sustained bull market that can get us to new all-time highs, a lot of people have lost out a lot of their money sort of trying to time the market and think that they know exactly when the market is going to sort of turn around each of these cases, right? Which is just simply very difficult to do. And again, I know I don't provide financial advice on this channel. I should point that out, but I've said many, many times, and I will repeat myself again, that sort of the best thing in crypto that I've done in the past is, and will always continue to be, that a dynamic DCA strategy, not hey, let's all time the bottom exactly and time the top exactly. No, historically, it's just a simple, mindless DCA strategy that wins out in the end, where in my case, I like to weight them based on risk levels. Okay, so that's the whole point of the strategy. Okay, and I just want to remind people of that, because I think it can be easy to sort of get lost in in trying to time things, right? You try to time the top exactly, you try to time the bottom exactly. And these things are very difficult to do. So just remember that as you navigate the cryptoverse, that coming up with some type of a long-term DCA strategy, whether you want to dynamically do it like I do, or do it based on some other method, that's generally the sort of the approach that has historically won out and will likely continue to do well as we continue to press forward through time. Okay, so as far as the golden crosses and death crosses go, I think we're going to have a number of golden crosses and death crosses on the daily time frame over the course of the next 12 to 18 months, is my guess. Again, this is what you generally get from choppy markets, and you can already see the 50-day slowly starting to sort of fade here a little bit, right? Like, it is losing some of this momentum, and if it kind of slowly turns back over here, it's not going to take much longer before you're going to see, sort of a death cross, right? And what happens when you get a death cross? Well, normally the price pumps, because by the time you get a death cross, the price would have already had to drop, right? So imagine the price does something like this, right? Where maybe it pumps back up briefly, and then comes back in, and then you see sort of the 50-day roll over and give you a death cross over here. Like, let's say it does something like this. Then by the time you get this death cross, a lot of times the market will pump going into that, right? But it doesn't mean you can't get a continuation of the trend. But a lot of times you'll see a pump going into something like that. So that's my general expectation for the markets. I mean, we talked about the bull market support band, which is sort of what we led off here with. And the whole idea there is that whenever we do get a sell-off, that is sort of sufficient to get us out of this is localized uptrend, that's going to be the first line of defense for the bulls to try to hold. Okay, and it always is. Coming out of a year-long trend to the downside, a bear market year, the bulls always try to hold the 20-week SMA. Historically, the first attempt it fails. Historically, the first attempt generally fails to hold, except for maybe this cycle over here where it held. But the last two cycles, the first attempt to hold was not successful. Okay, so I do want to help down. I do want to temper expectations somewhat because I've seen this, multiple times where we generally get ahead of ourselves in sort of the year after the bear market year, where we all hope that it's going to hold and then it's going to go higher and then it just falls back down and we spend a while consolidating at lower prices again. So again, 20-week SMA, about 19.8 or so, 21-week EMA, 21.3. We're sitting at 22.5. To get down to those levels, to get down to the 20-week SMA, 21-week EMA, it would be about a 4% drop. The 20-week SMA is about an 11% drop. Okay? And the main things, arguably, that have been holding Bitcoin down are the 50-week and the 200-week. Okay? So the 50-week is also coming down. It's at 23.6. So, if Bitcoin were to pump back up, the 50-week is sort of the line in the sand that you have to look at. And if we get above that on a wick, there's still the 200-week, which note that these two prior wicks over here were sort of rejected at the 200-week SMA. Now, back then, the 200-week SMA was lower than it is today. Today, the 200-week SMA is almost at 25.3. 25.3K almost. It's at 25,265. So, you have to remember that the 200-week SMA, and I think a lot of people sort of look at this and act like they know what's going to happen. I think that's normally a red flag. Like, we have to kind of admit that there's just simply there's no way you can fully know what's going to happen, especially when it comes to the 200-week SMA, because we've never experienced this before. We've never had a bear market where we were just hanging out for months below the 200-week moving average, right? Like this is not historically been a thing. And so, to some degree, this is uncharted territory, no pun intended. And I think you have to be somewhat flexible in what that means. And, unfortunately, we can't look at what Bitcoin has previously done to sort of understand as to what it's most likely going to do. We can look at the S&P and see that the forward returns over the next 1 to 2 years after a death cross were pretty attractive, generally speaking. But there was typically more downside over shorter time frames before you actually saw those more sustained uptrends. So these are just all things to take into consideration as you navigate the cryptoverse. I know there are plenty of reasons why a lot of people would love to see a rally back up, but I don't think we're going to see a rally back to highs this year. I think it's sort of the same. It's funny how cyclically these things play out. A lot of people thought the same thing in 2019 and even in 2015. 2015, not as much. 2015 was actually relatively boring, which is kind of how I think 2023 is going to go. Yeah, it's funny. It's just funny how this behavior is just very cyclical and similar types of calls were made in 2019 only for the rally to ultimately be faded and for us to come back down. Now, that doesn't mean that it can't continue to go up, but again, here we are still facing the 50-week and the 200-week. Over here in 2019, we were well above the 200-week. Okay, so when sort of this rally occurred up to the 50-week, we were already above the 200-week. Now we're rally up to the 50-week, and we're below the 200-week. So it's not exactly the same type of thing. But anyways, in the short term, I've always said this, short-term moves are more or less, I think, akin to a random walk or geometric Brownian motion. It's really difficult to predict exactly which way things are going to go. I know a lot of people on YouTube are always predicting this stuff, and a lot of them have much better track record than I would ever have trying to predict it. But I don't really think it's that easy to know. I think that what would likely happen is you of course have people that certainly think a certain thing and narratives that are waiting to be used So if we break down, it's going to be because Powell, because certain narrative comes out that Powell was hawkish. If we break up, people are going to interpret it as Powell being dovish. Um, so I mean, it's funny how you'll see like certain prices or certain assets break a certain way, and then a narrative will be put out there, right? Like asset prices rise on hopes that the Fed will pivot, and then maybe that afternoon the asset prices fall back down, and then the same narrative, but it'll be flipped the other way, and then it'll say, well, asset prices fall because the Fed is continuing to tighten. So you can always spin the narrative, of course, to sort of fit the price action. But remember, price action leads the narrative, right? So price action is the narrative, right? I mean, the price action will go a certain direction, and then the narrative will be found sort of fit what we think is actually going on. But in the short term, a daily close below 22.2 is going to start to look somewhat weak. Okay, if that doesn't happen, and we start to see a rise from the bottom part of this channel, then there still is some room here for some potential upside. Even notwithstanding not even going to a new high, you could still come up a bit and sort of test some of these prior levels that we didn't really spend a ton of time at. So we'll see what happens tomorrow and over the coming weeks. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.